The market doesn't know your entry price. It has no idea what you paid. And yet your brain treats that single number like the center of the universe. Every hold, every exit, every desperate wish to just get back to break even, all of it quietly orbits around a number that is completely meaningless to everyone else on the planet. This is anchoring bias. And once you see how deeply it hijacks your decisions, you can't unsee it. Here's the strange part. Your entry price is data about your past. It tells you nothing about the future. But your brain refuses to let it go. Let's start with what anchoring actually is. Psychologists ran a famous experiment. They spun a wheel of fortune, then asked people to estimate the percentage of African countries in the United Nations. The wheel was rigged to land on either 10 or 65. People who saw 10 guessed low. People who saw 65 guessed high. A random number on a wheel bent their judgment. That's anchoring. The mind grabs the first number it sees and drags every estimate toward it, even when the number is obviously irrelevant. Now think about what your entry price is. It's the first number that matters to you in a trade. It becomes the anchor everything else gets measured against. You didn't just buy an asset. You planted a flag. And from that moment, the stock isn't at $42, it's $3 below where I bought. Watch how that distortion spreads. The market's real question is simple: given everything I know right now, is this a good place to hold or exit? But the anchored brain asks a completely different question: am I up or down from my entry? And those two questions produce opposite decisions. Say you bought at 50. The price drops to 42. The fundamentals have deteriorated, the trend has broken, every rational signal says get out. But your brain whispers, it was 50 once. It'll come back. You're not selling a loser, you're waiting for it to recover. The anchor turns a bad position into a hostage situation. Here's the tell. Ask yourself one question: if I had no position right now, and I saw this exact chart with this exact news, would I buy it today? If the answer is no, then holding is just a decision to buy it all over again, at this price. The only reason you're still in is the anchor. The anchor works in both directions, and this is where it gets sneaky. It doesn't just make you hold losers. It makes you dump winners too soon. You bought at 50, it runs to 58. $8 of profit feels enormous relative to your anchor. So you grab it. You sell strength. But the market doesn't measure the move from your entry. It measures the move from where value actually is. A trend that's just beginning looks expensive only because you're comparing it to a meaningless flag you planted. So the anchor produces the deadliest combination in trading: cutting winners short and letting losers run. The exact opposite of what survives long term. And it gets worse, because the anchor doesn't stay put. When a trade goes against you, the brain quietly re-anchors to soften the pain. You bought at 50, hoped for 60. It falls to 40. Now suddenly 45 would be a great exit. Your target didn't come from analysis. It came from your loss. This is how a trading plan dies. Not in one dramatic moment, but through a slow drift of anchors, each one bending your judgment a little more toward wishful thinking. Why is the brain wired like this? Because the entry price is where your emotional accounting begins. It's the line between winning and losing hurts about twice as much as winning feels good. So the mind clings to the anchor not because it's useful, but because crossing back above it means you don't have to admit you were wrong. The anchor protects your ego, not your account. Now here's the reframe that breaks the spell. Every single moment, the market offers you a fresh choice, at a fresh price, with fresh information. Your entry price is a sunk cost. It's already spent. It cannot be undone by holding, and it cannot be honored by hoping. The market has already forgotten it, the only place it still exists is inside your head. So how do you actually cut the anchor loose? First, decide your exit before you enter, based on the chart and your risk, not on your entry. Predefined lines don't drift. Second, judge positions on their forward story, not their history. Keep asking that one question: would I open this trade right now? If not, your reason for staying is emotional, not logical. Third, measure performance against your plan, not against break-even. A disciplined loss taken on schedule is a better trade than a lucky winner you held on hope. Because here's the truth underneath all of it. The traders who last aren't the ones who never lose. They're the ones who stopped letting a single number from the past run their entire future. The price you bought at is history. The only price that matters is the one in front of you, and the only question that matters is what you do with fresh eyes.